Now, I recall this in April, and it did seem to be a good thing that we were going to be admitted to this, and then I think people forgot about it. What's happened since the announcement in April?
Yeah, I mean, the process of inclusion in the index is that once Citibank has announced it, which is done, you know, as I pointed out last time, also is done by a completely separate research unit within Citibank. Once the announcement is made that South Africa has become eligible for inclusion into the index, they go into a monitoring phase. And South Africa has now been monitored for a period of 3 months in which they had to meet certain minimum entry criteria. It has now successfully reached that point.
What were the sorts of things that we had to do or not do to meet that measure?
It's essentially 3 things. It's a size requirement. You've got to have there's various size requirements, but it boils down to the easy one to remember is $50 billion in outstanding debt of eligible debt. Now, the eligible debt are government bonds, but it's plain vanilla government bonds, so it doesn't include inflation linkers. And each issue has to have 10 billion rand in issue. So once you've added up all the 10 billion issues out there, you end off with 11 bonds at the moment, which gives us a total market capitalization of about, it's just over $80 billion. So it means we comfortably meet the minimum entry requirement from a size point of view. Secondly, it's from a credit rating point of view. We have to have single A credit ratings by either Moody's or S&P. As it is, we've got a single A by S&P and an A minus by Moody's, so we meet those 2 requirements. And then thirdly, it is barriers to trade or ability to trade, I should actually rather say. And South Africa, we've known, has basically forever been a market in which foreign investors are easily able to trade debt. There's no capital hindrances, there's no tax hindrances, which is, for example, why a number of countries, big emerging markets like, for example, China or India may not be eligible for inclusion because they don't meet the 3rd requirement.
Is this like getting to play in the World Cup or the big league? Why is it a good thing for us?
Oh, it's fantastic because what this does, traditionally South Africa is viewed as an emerging market. So South Africa goes into various emerging market indices. What the big difference is with the World Government Bond Index is it's actually a developed market index. For example, Japan, 30% of the weight, US, UK, Germany, Sweden. You know, there's a number of these countries which are in this index. And the emerging market component, South Africa is only the 4th emerging market. We've got Mexico, Poland, Singapore, Malaysia. So we're the 5th emerging market to come in. But the weights of those 4 countries combined is around about 2% or 2.5%. So it gives you an idea that the typical investor of the WGBI is in fact a developed market, and it opens up South Africa to a complete new investor base, which previously did not have access to.
What practical effect will this have on the investment climate, on the investment community, the big guys who buy bonds?
Well, what it means is that we've now brought in a complete new investor base into the country. Well, will in September, when on the last day of September, when the inclusion actually occurs. And it suddenly means that we've opened up the door. You know, you've got local pension funds, you've got a growing local hedge fund industry, you've always had foreign banks and increasingly we've had foreign emerging market real money investors, but now we've got foreign developed market investors coming. So it's broadening the investor base, is broadening the base of the participants in the market, adds depth to the market, it adds much more stability to the nature of the foreign flows that come in the market. And in that sense, it's a very big step ahead for South Africa.
There's something called the World Broad Investment Grade, World Big, a nice little acronym there, World Broad Investment Grade. What's that?
Well, that is another index which Citibank monitors, and WGBI is a component of the World Big Index. Now, the people who track World Big versus the people who track the WGBI itself are 2 different investor clients. A lot of the WGBI investors, and this is probably one of the important points of the WGBI, are passive trackers. Something happens in the index, the fund managers will replicate it exactly, right? So South Africa gets included, South Africa will be bought, full stop. You know, that's just simply how many of the WGBI investors work. World Big is, it's not tracked by as many investors, so the WGBI is in fact the big one. And it's also an actively, the investor community tends to be an active management community. So the foreign investor will now say, we can choose to add South Africa into our portfolio or not. You know, so the World Big component, it adds further depth to it, but it is a smaller event than the WGBI itself.
What about the status of our government bonds? And maybe this is an oblique way of looking at the question you're talking about, but sovereign debt and bonds that are issued by governments, taken for granted for many years in most countries. But Europe, you can't take it for granted anymore. Some of them have been downgraded, some of them very low.
Yep.
South Africa still stands pretty high by that kind of league table, doesn't it?
Oh, it does. I mean, South Africa goes in, and it won't be the lowest credit rating in the index. There will be countries with lower credit. And I mean, take, for example, Greece used to be in the index, but they've fallen out because of credit concerns.
How easy is it to fall out?
Well, it's not. I mean, the entry hurdle is higher than the exit hurdle. So once you've gotten in, there's a cushion which allows you to drift down through. And I think we have to go down to a BBB minus, in fact, below BBB minus, if I'm not mistaken. But it's quite a few notches down for us. The same, for example, the size requirement drops halves, right? So to get in, you've got to have 50 billion. To fall out, you've got to have 25 billion. You know, so it is, in fact, quite difficult to fall out unless you have a major credit event, which you don't at the moment. You know, so.
What about little wobbles like Sanral and the bonds that they issue? Because Transnet issues bonds, Eskom does, Sanral does. Now, government ultimately must be the surety there. Now, they've made it very clear they're not going to allow a default on the Sanral bonds, but it was a bit of a wobble.
It is a wobble, and it is a concern because it does have a potential impact on the country credit rating. But I think typically when your rating agencies look at the country, they in fact include the contingent liabilities within the rating. So whether the government pays for it or whether Sanral pays for it probably doesn't really matter because the rating agencies have always viewed it as South Africa, you know, as a contingent liability. What probably the issue is more at a more macro level, policy making level. You know, what does it tell you about policy formulation at a cabinet level? You know, these flip-flops that we're getting between, you know, yes, we're going for it, no, we're not, yes, we are, you know, and that is probably the bigger concern over the financial aspect of it.
Are we comparable to other countries in that we sometimes think we're the ones who have policy flip-flops? There must be others, and all these things are taken into account by the raters of these bonds.
No, of course. I mean, it's not unusual. I mean, what I think happened in South Africa is that under Mbeki, you had a singularity of purpose. You had a cabinet that was driven and it was very clearly focused on a set of objectives. Under Zuma, of course, we know that he got his support base from a disparate grouping, which meant that his cabinet was in more of a coalition government than, in fact, a cabinet which pursues, you know, clear objectives. And that's why you have this problem with policy decisions that go from left, you know, go left to right.
Well, that was Leon Myburgh, Sub-Saharan Africa Strategist at Citi.